Hello everyone. Good evening. Sorry, I just turned on the audio right now. Mic ഇപ്പോഴാണ് ഓപ്പൺ ചെയ്തത്. I think it's audible right now. Can you hear me now? Hi Adil, how are you doing? You are in India right now, right? Hi Nahim. All good? Long back. Have never seen you recently. Where are you? Where are you actually? എവിടെയാണ്? By yourself. I'm actually still planning. ഈ ഒരു resistance, if this resistance is broken, we're going to be taking a long position. So if we see a good candle to the downside, we go for the short position. So within 10 minutes we can decide. Okay, so Nahim, you are in India right now. Oh, I didn't know that. Great. So you are on the vacation right now. Still finding time to take the raid. That's great. So let's have a look into the chart. Now we can see the resistance is actually about to be broken. The market manipulated the support and seeped the liquidity below the stop loss of the buyers over here. You can see here, and also this was the liquidity zone recent. It is already taken. So I am planning for a long position, 80%. So if we see any sudden movement in the market, we are going to be going for the sell. Okay. So I think after seeping the liquidity of the buyers, probably the market is going to be seeping the liquidity of sellers. So we got one support over here and the golden zone, Fibonacci retracement, golden zone 618 to 77%. So the market, in my opinion, that is going to be most likely they're trying to break this resistance. Now we can see the market is trying to break this resistance. Yeah, that's the reason I'm going for a long position above this area. I set the stop loss below this low right here and take the profit to the, of course it's FOMC, so we can probably go for higher risk reward ratio. Let's see if we can put the stop loss a little bit tighter like this. It's the golden zone and the recent high. So 1:7. We can target. We can target like this. So now we can see it was a downtrend in the 4-hour and 1-hour trend. You can see it was a downtrend and trend line is broken over here and it is retesting as a support. So most probably the market is reversed in this situation. If the news is beneficial for the buyers, definitely it's going to be flying. It's like a rocket. So we have to patiently wait for the news. Before the news, we will be taking the entry. We can maybe put the buy stop if still the the sellers are getting not interested, then we can go for this buy stop. Nasdaq, I need to check the Nasdaq. I'm actually planning for sticking with one instrument during the news. If you ask me about the Nasdaq, you can see over here, this was the support and resistance. You can see over here, this was the resistance and it is broken, it became the support, last support. And see the liquidity of this level, the trend line liquidity is set, and the rest liquidity is over there. So you can see back in days, we can see the same level of market condition for the gold and Nasdaq is almost same. So I'm just planning for the long position if you ask me to do so. This also I'm planning for the long position if we get the time, because it's really difficult for going for multiple trades during this event, because we will not be able to book the profit instantly. We will not be able to stop loss trailing at the right moment. So we have to focus on only just one risk. Okay, so I think the buyers are trying to save the liquidity, but it's not confirmed right now. So let's wait for a couple of minutes, then we can go for this buy stop. So I'll just put the entries over here. The buy stop XAUSD 4051, the stop loss 4035, and the take profit, we can just go for the open TP, and the first profit level can be like this level. Just mark this. Then the next target will be like this. So we can go for the buy stop. If the market is crashing, we don't get the entry, so it's okay if you don't get the opportunity, but if you get the opportunity, we don't want to miss it. So this is my setup as of now. We can go for this buy stop. So normally the market will be showing very volatile, but sometimes it's a it's a luck. Sometimes it will go in the same direction, sometimes it will go a volatility going up and going down, something like that. So we need to focus on the risk management. Of course, we have to take small risk according to your capital. Okay, if you have $1,000 of capital, you can risk $50, $60, $70, something like that. Okay guys, 30 seconds. It's almost there. Let's see what happens in the market. 10 seconds. Let's go for this lower time frame and watch the market. Okay, it's going up. That's a good thing. But the first spike, we are going to be watching the first spike. Yeah, it's really good movement. So you can set your stop loss to the break-even level. You can place your stop loss to the break-even level so you don't lose anything, right? So please make sure that you're risking properly. You don't have to keep the same stop loss, okay? But what a moment. This is just the first spike. This is not the exact direction. Maybe it can reverse. So make sure that you're making, putting your stop loss to the break-even level, please. Perfect. So we got 1:2 or 3, something like that. We got 1:2 right now. So that's a good profit. If any of risk takers are here, like the safe traders are here, you can book the profit. If the risk takers you are, then you can just hold your position, right? Let's do this. So we are looking for the golden zone. Next zone is the golden zone, okay? So our first profit is taken this level, this support level. So we got 1:2. Now we are focusing on the 4,112, okay? So take the profit, take some partial, and let's wait for the more moment, okay? The risk takers only, please hold. Please put your comment like how much profit you got from this trade. 2K running, that's really nice. You book $1,000 and still you have 2K running. That's a lot of risk, I would say. What about you other guys? How much profit you booked? How much profit is right now running? So set your stop loss to break even, okay? So now the market is very volatile. This is a news time, so we must respect the market condition. All right, so this is the reminder message for all of you. Set your stop loss to the break even. Market is still going up. Perfect. 0.50 holding. Hi Hassan, did you make any profit or are you still on the trade? We are running profit. Hello Shamsi, you can just see the stop loss over here, 4035.419. It was the old stop loss. Now it's in the profit side. You can just set your stop loss to the break even level. That's above the 4051. Okay. Make sure that you're booking profit, or if you are a safe trader, you just book the partial and take the stop loss to the break even level. No Hassan, it's too late. Now you can see it's in the profit. It's almost like 1:2 right now. So you can't take this entry. You just missed the boat. Let's see. Don't worry. It's okay. It's going up again. Wow. This trade is completely depends on the technical analysis, not the news. As you can see, and I already know that, I just took this entry. I just told you to take this entry before the news. So completely, we can rely on the technical. Even there is a fundamental news over there. So most of the time, the technical wins rather than the fundamental. Because even the market wants to sell, they need liquidity. Already they are taken the liquidity of the buyers. Now they need the liquidity of the sellers so that can move further. Even they have to sell it. So this is exactly where the point we have to understand. The technical is always winning. Most of the time it wins. All right, so we got a good profit over here. It's almost like 1:2. Now it's running in the 1:2 level. Let's see at 10:30 p.m. in Dubai. So we have the press conference. So at that time the market will be flying further, I guess. Yes, you can peacefully sleep. That's the reason I made this trade. I just conducted this live session. For the past days, I was not able to take the live sessions, the live stream, but I just found this time for you guys. Sure, Cyril bro, but it was too late for the entry. There is no re-entry for the news, in my opinion. I don't give the re-entries on the news time because it's very volatile and the spread charge is also high. So before the news, if you're taking the entry, that will be the better decision. So there is no trade. Let's have a look into the Nasdaq. I predicted the long position, but it's not moving as of now. You can see the market is going up anyways. But during the press conference, it's really depend on the press conference, the FOMC press conference. Then the market, the institution will decide whether to buy the Nasdaq or sell the Nasdaq. Now you can see the Nasdaq is also going up. Anyway, the trade is actually running one more than 1:2. I think nearly 1:2. So how many you have made the profit with this trade? Please let me know in the comment section. This golden zone is really important because it's a Fibonacci retracement zone. So we have to accept it because even the market needs to sell, they will be making this high and selling it over here. So make sure that you be careful with the trades, okay? The 1 minute, it's a big candle, really big candle. But in 1 hour, it's a small candle, not that much bigger. Because we have taken some, the higher time frame trade. The stop loss is also 1,400 something. Yes, most of the traders are planning for the sell in the gold. I don't know why, because I think they predict the sell, but I was just the opposite. Most of the time, this happens with me. But it's okay. Last news trading was also good in our channel, I guess. In our premium community, we got the continuous two TPs, good profit in the last PPI news and CPI news. Now it's FOMC. So everyone is waiting for the FOMC press conference for taking an entry. So we are waiting for the institutions to be onboarding in the market at 10:30 UI time. Okay, we have 20 minutes more. Okay, the 5 minute candle is the next candle is also in the bullish scenario. Let's see. Okay, Hassan, it's okay. I think you just reached the home very late. Nothing like that, bro. Just an experience. We are sticking with the technical analysis. That's it. Nothing, something, nothing else. That's it. Yeah, it's making new high. Let's see. The market is making new high. That's a good thing for us. That's a perfect trade. Let's wait for the market for the press conference, so we can get more profit. Maybe we get the break even, but make sure that you book the profit. That's a lot of money for people, isn't it? And a lot of the stop losses as well. So most of the people who went for the sell, um, so so sad about that, because they just got the stop loss in the news. Probably they are going to be risking more during the news. So it's it's our day today. Maybe the next time it will be their day. So it's a part of the game. So now you can clearly see the market wants to, you know, they want to break this resistance multiple times. After seeping the buyer's liquidity, the stop loss, it went up against with good bullish movement. You can see good bullish movement over here. So keep going up. So that was my technical setup, and also the golden zone here for the target, and there's a liquidity seep, and also the 4 hour downtrend is broken and it is retesting as a support. The last retest was today, just an hours before. So after that they will probably going for getting the liquidity of sellers. That's a buy side liquidity. So that was this plan of this trade, the simple strategy, nothing else. So we look for the zones and we target the direction. That's it. So this is our next target, 4112.775. That's a golden So the Fibonacci 618, for example, if you take a look on this from here to here, you can see this is the 618 from here to here. This is the 618 and 7050 percentage. That's a retracement zone. It is already retraced over here and it's coming back again to retrace the same level. So book your profit and trail your stop loss to the break even. So we end up with the happy face, right? Any other trade coming, we can go for the Nasdaq. If it's broken, we can go for the buy. I predict the market to be going high, but only because the Nasdaq is not like gold. It really depends on the news. So I said about the gold, but here in the Nasdaq, the different story. So it really depends on the news. It can happen sell, it can happen buy. But technically, if you say this is the liquidity zone, and this is also liquidity zone, didn't that much sweeping over there. So we look for the buy if it's breaking. Okay, we're looking for the buy only, the Nasdaq. You can just risk like this, above this level you can go for the stop loss, but stop loss is not correct, so we need a stop loss as well. There should be a stop loss, so I can't say that in the current situation. So really depends on the news most of the times. For the gold, it really depends on the technical analysis. It's going down. Let's see if we can find an opportunity for the press conference. We have 10 minutes, right? 10 minutes remaining, so we can go for the Nasdaq, I guess. Let's analyze the Nasdaq. This is going to be our Nasdaq entry. Just risk small, okay? This is our second trade in the news, so please risk small. We shouldn't be greedy, okay? So if this stop loss is not broken before the news, then we can go for this buy stop. This is a Nasdaq entry. I'll show this. I'll just share this in the community so we can have a look. If you need to access our community, you can just message me on the number which is given on the banner. So it's going to be in the 5-minute. If this stop loss is broken, we should avoid this trade. Okay, so there is a chance for folding it. Okay, so Hassan, I think you took this trade, right? So this is our entry for the press conference. Okay, but stop loss is almost tight, so we have to avoid this if it's broken. Okay, so at least this below this level. If it's broken below this level, we have to avoid this trade. We have to cancel the trade. Okay, just 1 minute left. All clear. Yeah, okay. Thank you. Thank you for the update. Are you guys ready?
An FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion.
Nasdaq is still valid. Yes, bro. The conference meeting is happening, is still valid. Okay, you can keep this. The XAUSD might be break even hit, but I think some traders is still holding. Let's hold it.
We have begun at that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information. and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal, and where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows four-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict.
Okay, you can hold the trade. It's okay. Let's see. Set your stop loss to the break even, okay?
Our meeting, vigorous discussions centered on four questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Okay, I think our trade is active right now. The Nasdaq, the gold is going up. I think Nasdaq is active now. How many of you have got this active trade? Okay, let's wait for the levels to hit. Okay, when it is in the profit side, you can trade your stop loss to the break even point. Okay, make sure that you are doing it. Okay, it's a news trade. Okay, let's see.
Days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, you know, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so,
Sorry.
I'm sorry, it's your question. So, interpreting markets is an imperfect business. We central bankers, like market pros, can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly, but the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw three dissents. Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you were right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy.
When it is hitting the 1:1, you can trail your stop loss to the break even, so you don't miss, like the loss. So you can avoid the loss. I'm watching the press conference, so that's why I'm not telling anything. Safe traders, please trail your stop loss to the break even, okay?
There was a large majority support for the decision that we made in the room, but I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the core CPI print for June?
So in 2 words, not much. Not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead, but I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data which surprised some a couple of weeks ago.
Hi, Chairman Warsh. Thanks. It's Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the two-year yield. Suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3.
All right, so now it's hitting the 1:1. So the safe traders can book the profit, and risk takers and trail your stop loss, of course, and taking some partial. All right. So the gold is actually going up. So there is no much more reversal that we can see right now. So we'll be holding this position for much more higher. Let's see.
So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Thank you, Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution, but I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made into the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do with the inflation target. Making clear expectations is one part of it. making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our.
All right, so the gold is getting to touch the golden zone. This is our next profit level, 4112.775. Enjoy the profit, guys. It's a good one. Really, we got two perfect shorts. So this is going to be our rocket today. So we can see we got a good movement for the buy. It's a lot of pips. So book the profit and take partial and hold the rest lot size for more profits.
Subscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months, we're going to refine that view and have a better judgment, and we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically in your mind would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions. And I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. But they matter more, what are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, which is I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them.
Hello to the new members in the YouTube. Thank you so much for watching my live trading. So if you want to make profit with me on Tuesdays, Wednesday and Thursday during the New York section, please make sure that you have subscribed to my channel and also the bell icon to be notified. So we can definitely trade together on these 3 days in the week. All right, so I'll be here for much more time. So let's look into the trade and focusing on the 1:2 for the Nasdaq and the XA USD. We almost got around 1:3.46. All right, so it's touching the golden zone. That is going to be our next profit booking zone. So you can book some partial when it is hitting or it is reaching the nearby 4112.77. That's a golden zone. There can be a reversal from the golden zone, but we are not sure. But this kind of bullish movement is pretty much good for the buyers. So let's look into the chart and wait for the next level. Thank you. So please let me know in the chat box how much profit you have made this trade, how many profits you have booked, how many is holding right now. For the latecomers, I gave you this trade because I was not ready for the second trade during the live, but most of them missed the XA USD trade. That's the reason I look for the next trade during the news, because during the news I have to switch the instruments simultaneously. So that was the reason I was not able to give you the trades for the multiple instruments, but I made it happen. Thank you so much for believing me, and it was two trades was really good. Good result we got. So let's see what happens next.
I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business capex in around AI, it's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'm going to I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the
Oh gosh, congratulations, $4,000 you booked. That's a really good profit. Good for you. Anyone else booked profit? Please let me know in the comment section. Hassan Khan, how about you? Are you here? You there? Cyril, Shamsu, Adil, are you there? Did you book the profit? Or are you still holding it? Oh, Cyril, you didn't take any trade? Okay, that's okay. Okay, okay, guys. So I think I need to call it off today. So it was a good section with you all, guys. Thank you so much for attending the live session. So I just shared the screenshot, all the levels. You can take a screenshot of this image, so you can just target for the next TPs, and always make sure that you are protecting your capital if you are risking your capital. So if you're risking the profit, you can go for the risk taker things. If you are risking your capital, you go for the safe trader things. So all the very best for your profit, and enjoy, and see you on the next day. That's tomorrow. So I will be trying to go for the live tomorrow. Let's see. So I'll just update in my community channel. So if you want to log into my community channel, you can find the link below the description, and also you can find on my channel.